Welcome to the deep dive.
Glad to be here.
Today we're looking at a really interesting set of sources. They give us a market analysis for Bitcoin right up to date, August 12th, 2025.
Yeah, a snapshot in time.
Exactly. And our mission for you, the listener, is to really get a handle on this phase Bitcoin's in, they're calling it healthy consolidation.
That 114K to $115 a week range, it's absorbing pressure.
Right. And we want to explore that tug-of-war, the forces pushing and pulling on its price in the near term. The sources lay it out quite well.
Definitely some conflicting signals in there.
So let's start with that consolidation. One source describes it as a compressed spring.
Yeah, setting the stage for a powerful expansion sounds pretty bullish.
It does. It makes you think Bitcoin's just kind of waiting to pop, doesn't it?
Well, yes, but here's where it gets interesting. There's a subtle divergence we need to look at.
Okay.
While you have that compressed spring idea, the BTC VXCO 52-week Z-score is sitting at 1.40.
Right, and that measures Bitcoin's price moves against market volatility?
Exactly. And historically, when that Z-score gets closer to +2, well, that usually signals Bitcoin might be getting overbought.
So potentially run up too fast, maybe due for a pullback.
Potentially, yeah. Raises the question, if it does break out from this consolidation, how sustainable is that move going to be? It adds a layer of caution.
Okay, so that's the spring, but maybe wound a bit tight, potentially overbought. What's providing the actual support right now, the upward pull in this tug-of-war?
Well, the big story there is definitely the institutional inflows. We're talking about the spot Bitcoin ETFs.
The exchange-traded funds.
Right. Our sources flag August 8th, specifically net inflows of $91.5 million on that day alone.
Wow.
Yeah, with BlackRock and Bitwise leading the charge. It's a significant number.
And it's more than just a number, isn't it? Our sources suggest this points to something bigger.
It really does. It signals a potential fundamental shift.
A shift away from mostly retail investors driving things.
Towards a market increasingly influenced, maybe even dominated, by institutional capital.
And these big players, they tend to buy during stable periods like this consolidation, right? Building positions.
Exactly. They often have a longer-term view. It's seen as stickier demand compared to more speculative retail flows.
Stickier demand, so potentially less volatility, maybe a stronger price floor?
That's the implication, yeah. It suggests the market might be maturing, becoming a bit more stable, perhaps.
Okay, so that's a strong pull upwards the institutions. Now, what about the other side? What are the macroeconomic forces pushing against Bitcoin? The headwinds.
Well, the big one continues to be inflation. It just won't quite go away.
Still sticky?
Very sticky. The next big data point is the July CPI, the Consumer Price Index, due out narrow August 13th.
And the forecast.
Expected to tick up slightly. 2.8% headline, 3.8% core.
Yeah.
Partly blamed on new tariffs, apparently.
And if inflation stays sticky or ticks up, that means the Fed.
Yeah, that likely keeps the Federal Reserve cautious. It makes it harder for them to cut interest rates from the current 4.25, 4.50% level. They might even have to consider hiking again.
Right, and higher rates generally pull money out of riskier assets like crypto.
Precisely. It drains liquidity from the system, makes safer assets more attractive.
Okay, inflation's one headwind. What about the U.S. dollar? That often plays a huge role.
It absolutely does. And right now, a strengthening U.S. dollar index, the DXY, is a major concern.
Where is it at?
The key level to watch is 101. If the DXY sustains a move above that, well, that's probably the biggest immediate macro threat to Bitcoin.
Because historically,
the correlation is quite stark. Major Bitcoin bull runs tend to happen when the dollar is falling. Bear markets often line up with a rising dollar.
So that strong inverse relationship is a serious force Bitcoin has to fight against right now.
Definitely. It's a major headwind in this particular moment.
All right, so we've got this real tug-of-war, powerful institutional buying pulling up, but sticky inflation, and a potentially strong dollar pushing down. Given these cross-currents, what's the long-term picture look like according to the sources?
Well, despite the near-term noise, the long-term drivers are still seen as very compelling. Two key things stand out.
Okay.
First, Bitcoin's built-in scarcity. There's only ever going to be 21 million. And second, it's really remarkably strong correlation with global M2 money supply growth.
How strong are we talking?
The data shows a correlation of 0.94 between 2013 and 2024. That's almost perfectly correlated.
Wow. So as global money supply expands?
Bitcoin's price has historically tracked that very closely. This positions it, as that potential hedge against ongoing fiat currency debasement, a digital store of value argument.
So that brings us to a really interesting final thought for you, the listener, watching all this play out. If that compressed spring does break upwards, if Bitcoin makes a strong move, but the US dollar also stays strong or keeps strengthening, will this new institutional demand be enough?
Enough to break that historical pattern.
Exactly. Will it be enough for Bitcoin to finally decouple from that inverse relationship with the dollar? Or will the macro environment, the strong dollar, ultimately win out this time?
That's the million-dollar question, isn't it? Or perhaps the $115,000 question right now.
Definitely something to keep an eye on as the market continues to evolve.